Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, we covered some income strategies by using leveraged assets. That would be 401ks, IRAs. Should we start over?
Let's start over.
Let's start over. I didn't like that one. We're going to keep it live on the YouTube. That's like two times in the last, month or so?
Yes, we need to be impressive.
Where we've had to start over. Don't save that one. Gosh darn it. Let's rewind. All right. 10:50 on the clock. So that's what happens when we stop and start. I lose my train of thought.
Mm-hmm. Yep.
All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, we covered some income strategies by using leveraged assets. And that's basically having your dollars work for you. We talked about the futures market. Al was getting into some currencies through the futures market. And being able to use those markets, we did not talk about that. These are 24-hour markets. Right. So if people are working, let's say, during the day, it's very difficult to trade stock when you work during the day. It's only open 8:30 until 3 o'clock our time. We're in Central Time Zone here right now. Now, when you have a 24-hour market, that allows you to have maybe a second income strategy on top of your job, not having to go somewhere. It does take capital to get in the markets, but you may be surprised on how much less capital it actually takes compared to stocks. And we discussed that, and we introduced you to these different concepts and techniques in these investing classes that we do live, actually in person, right here at the Academy and at other locations all across the metro. If you're listening to the radio right now, wherever you're listening, probably driving right now, if you want to come into one of these classes, you might want to pull over, but just text the word trading to the number 210, and that'll be for 2 seats for an investing class near you. Text the word investing to the number 210, and that's one for you and one for a friend. When you text that in, you're going to get a text right back, and there's going to be a link to our landing page. All you got to do is just click that link, and you can pick your own date and time that works best for you. So, Al, in this next segment here, since we covered more of the income side of things, more on the future side of things on the last segment, I think it's important to cover some of the topics and concepts on retirement accounts. A lot of people listening right now have 401ks, have IRAs, and hopefully they're the most wealthy they've ever been. If you're not, well, you might want to consider doing something a little bit different. But if you are, it's important to protect those gains as well. Now, market could continue to keep soaring up. That's a possibility. The market could drop. That's a possibility as well. But wouldn't it help you sleep better at night knowing that it doesn't matter because you're protected for both scenarios? So let's talk about that. So let's just say, Al, somebody has an IRA.
Mm-hmm.
And it's, say with a management company or who knows what, it's with somebody. And they're just, they maybe talk to them once a year and they say all these puppy dogs and rainbows and say, here's these graphs that you're going to be, and here's where you're going to be at retirement time. And those are just projections based off of historical data.
Correct.
Which really doesn't consider what the market's going to do realistically, because you need the market to continue to go up at that percentage, right? I mean, you were a broker for many years. I'm assuming that's how that works.
Great. Now,
it's really not realistic, because if that's the case, if they're saying all this stuff, but nobody has enough to retire, well, let me retract that. Some people do. But the majority of the public just doesn't have enough to retire. There's got to be something wrong with that. So what are some of the things you can do a little bit differently when you have an IRA that might give you an opportunity to get to that promised land a little bit easier?
Well, choices would be one thing. In an IRA, let's talk about a self-directed IRA as opposed to what you just mentioned, an IRA that's being managed by somebody. If there is somebody who is managing your retirement account, whether it's an IRA or just a regular investment account, you're paying them fees. So you need to, first of all, look at what the fees are, what the total fees are, not just what they charge, but also are there fees embedded in the product that they have you invested in. If you're in mutual funds, there are going to be fees there. And we know that if you look at even 2% a year, which is on the low side.
Which sounds like not much.
It doesn't sound like a lot, but over the course of your working years, that could cost you 50 to 75% of what you could have. And there's
Because you're
studies
missing
that
out on
have
those
shown that.
opportunities.
You're missing out. Every dollar that's taken away from you, even at 2%, every dollar that's taken away is no longer there growing and compounding over time.
And that's just not us just saying that. I think, was it Jack Bogle that was explaining
Jack
that before
Bogle
he died?
did that. Yeah, Jack Bogle, who was one of the founders of Vanguard Mutual Funds, he started shortly before he passed away. Unfortunately, he passed away a few years ago. But shortly before that, he actually started looking at mutual funds, and he came out kind of against most of them because he felt that the fees were too high and the returns were mediocre. But he used an example where he took, if you put $10,000 into a mutual fund, you put $10,000 into a mutual fund, you leave it there for 50 years at 10% a year, you should have about $1,174,000. That's a pretty good return on a $10,000 investment. That's the value of the individual components of that mutual fund. If the mutual fund takes out 2%, over $700,000 of that is gone. Basically, it's like negative compounding. So you're putting up 100% of the money. Instead of getting your $1,174,000, you end up with about $460,000, less than half.
Which is pretty dog doo-doo. No, let's
and
talk
that's
about,
only at 2%, Josh.
That's only at 2%, yeah. So that's pretty dog doo-doo if you ask me. Since this is a family show.
Putting it kindly.
Yeah. So what are some things they can do differently then?
Yeah, and I mentioned choices. In a self-directed IRA, number one, you can eliminate that fee. So the 2% fee or whatever the fee might be, that's gone. But you have the opportunity to invest in more than just what you have available, say, in a 401k. You can invest in stocks if you want to. You can invest in mutual funds if you want to, or exchange-traded funds. You have the opportunity to invest in options, in the options market, the futures market, which we talked about in the last segment, the foreign exchange market. What about protection? Mm-hmm. You can use options as an insurance policy for your portfolio. You can use stop losses. In a 401k, by the way, you're limited to possibly no way of really protecting your assets. If you have a mutual fund, if most of your retirement money is in mutual funds, you can't have a stop loss on a mutual fund. You can't use options to protect mutual funds. So in a self-directed IRA, you have access to all of those things. You can generate potential returns in an up market, a down market, a sideways market. You have the opportunity to boost your returns. If you're using the leveraged assets like options, futures, and Forex, your potential return is much greater than if you're just doing, say, a simple stock position. So you've got a lot of opportunities there. To be honest with you, in your 401k, if you have one, you're already managing those. You're the one that's making all the decisions. So why not look at putting a self-directed IRA together? And since you're already managing your assets, do it with the opportunity to have more choices and maybe this is the most important thing, Josh, is to protect your assets.
Yeah, no, a lot of people listening are probably like, well, I don't know how to do that.
Sure.
Well, what do you do?
That's right. Well, nobody's born with that knowledge. Nobody's born with knowledge to do anything. You have to learn that from somewhere or someone. So what are we? Well, we're an academy. We teach people how to access the markets, how to look at ways of generating income, how to look at ways of growing your wealth, protecting your wealth, and then maybe generating income when you retire. Because when you retire, what happens to the income from your job?
That stops.
That is gone. Bills keep coming in. The cost of being alive is still there. So what if you could generate income off of your retirement money instead of just taking chunks of it out every time you needed to pay bills or do something with it?
Yeah, I want to talk about that, actually. That's a good topic for the next segment.
Sure.
So stay tuned for that. We're going to talk about income in retirement on the next segment. But, so just to clarify, if you have an IRA, you can direct that yourself.
Absolutely.
Okay. What if you have a 401k? I know we're getting close to the end of this segment here. Let's say you change jobs.
Sure.
Now, is there an option to do something with that?
Absolutely. You have a couple of options. You can roll your 401k from your previous employer into your new employer's 401k. You probably aren't going to want to do that after we talk to you about 401ks in these classes. But you can also take that money, that 401k money, you can roll it into a self-directed IRA. There's no tax penalty, there's no tax cost, and there's no penalty for doing that. You just want to be careful. Instead of just taking the cash and then looking at putting into something, there could be a penalty and a tax impact there. So you just roll it right from the 401k into your self-directed IRA.
I like that, and we're seeing a lot of people that have been changing jobs recently. That's what they want to do. They're like, I've heard about it. I don't know what to do. Can I do that? That's such a great opportunity.
Yeah, I talked to a lady yesterday who has 3 old 401ks with money in it. And just sitting there. So
can you imagine? I don't know. I should Google this stat, but the amount of money in 401ks that's just gone that no one ever is going to use.
I believe it's in the trillions of dollars. It's amazing. It's huge.
So that's your money. Don't just let that sit. Do something with that. But you got to know what to do. And if you're like, hey, I don't know what to do, that's why we have these investing classes. Exactly. We have classes specifically on 401ks, IRAs, retirement strategies to hopefully get to the area or the opportunity that you want to get to at retirement time. So that way you're not spending your time at retirement at the golden arches, because those are your golden years. You want to be able to do things that you want to do at that time. So I want to invite you to this investing class that covers 401k strategies, IRA strategies, whether you're looking to build those or just protect those. Simply just text the word investing to the number 210. That's for 2 seats for this retirement investing class on 401ks and IRAs. Text the word investing to the number 210, but you got to do that right now in this segment. Text investing to the number 210. When you do that, you're going to get a text right back, and there'll be a link to our landing page. You can pick your own date and time there. We'll also get you a call if we don't see that you registered, if you're having troubles with the technology. Text investing to the number 210, or just go to tradingacademy.com and you can pick your own date there. As I mentioned earlier, Al, I want to talk about income in retirement, why that's so important, and how do you actually accomplish that with different opportunities. This is Josh and Al, Investing and Trading Live. We will be right back. We will stay live on the YouTuber. See if you have any questions. We had a good morning on the YouTube stream a little bit ago. It's almost not even morning anymore. It still is morning, I guess. Would you know my name? That song, I sing so good, we might get copyright infringement.
I must need hearing aids.
Hearing aids, yeah, there you go.
Or earplugs.
Come on now.
No offense.
Oh, none taken. Last show we did, you said some nice things to me, and that was just too many, wasn't it?
I'm always saying nice things about you.
Yeah.
Straight from the heart.
Yeah, until I'm behind your back, right?
Somebody tell on me?
Somebody did. No, I have ears in the back of my head.
Yeah, that's what's wrong with your head.
Yeah.
I knew there was something different about you.
I told my kid that the other day. I said, I got eyes in the back of my head. He goes, no, you don't. I don't see them.
Yeah. You should have wore your glasses on the back, backwards.
Yeah. I think every parent's done that.
Yeah, they do. Yeah. More lies.
Mm-hmm. All right. So we'll do segment 4 here. We'll talk about income in retirement.
Mm-hmm.
See what are some of those opportunities right now. I'm from New York. The opportunities. Is that how they talk over there?
Yeah, sort of.
Is that the accent?
Mm-hmm.
All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. Once again, I am your host, Josh Lilquist. On the last segment, covered some retirement strategies, opportunities when you have an IRA, whether it's with a broker or some manager that's doing that, and how to direct that yourself. It's called self-directing. But also, if you have an IRA or a 401k with a old employer, there are opportunities and options that you actually have. And the key thing that Al was mentioning was having more choices. It's one of those 3 C's, more choices in those retirement accounts to hopefully get the returns that you want to have. There's better opportunities than just mutual funds. So we had a lot of people texting into these investing classes, specifically on retirement, 401k management, IRA management. If you want to come to one of these retirement investing classes, simply just text the word investing to the number 210, 210, and that's for 2 seats, one for you and a friend. Most people bring their spouse, but one for you and a friend. Text investing to the number 210, 210, or simply just go to tradingacademy.com and you can pick your own date there. By the way, when you do text that word investing to the number 210, 210, you'll get a text right back with a link to our landing page, and that'll be actually the landing page that you go to on tradingacademy.com. So, Al, in this next segment here, and as I mentioned earlier, it's so imperative to have income in retirement because you said it, you kind of hit the nail on the head earlier. When you stop working, what stops?
Your income.
Your income. And you don't want to just draw down those retirement accounts. Let's just say you're listening now and you have, let's just say $300,000 for retirement, which, as you probably are listening and you're probably knowing, that's just not going to be enough to retire and stay retired and really to be able to do things that you want to do and not just live off a fixed income. Mm-hmm. So you have two choices. One, say, you know what, here's what we got, honey. Let's just, eat ramen noodles and read books and stay home and not do a whole lot. And then just draw that down, and hopefully that lasts us our lifetime.
And she's going to be very happy with that.
She might be very happy with that, yes.
Right.
Sense the sarcasm. And if you're watching live on the YouTube stream, we look very sarcastic right now. That being said, that's one of your choices. Mm-hmm. Another choice would be, okay, hey, honey, we have a little bit saved up. We have $300,000, and we just know it's not going to be enough. Why don't we do something a little bit different and try to build an income strategy off of that? Not by using the whole thing, but using a small portion. That way we can hopefully extend the life of that money. But I think what the main thing a lot of people are, I'm actually talking with a lot of people now, they want to be able to leave a legacy for their family.
Sure.
So being able to extend the life of that money, but then leave some extra to their family. Usually, sometimes it's the kids, but normally it's the grandkids. Let's be real. You're listening right now, and you're like, oh, I'd love to leave something for the grandkids. Because I don't have any grandkids, but I think you do. Mm-hmm. And everybody loves their grandkids, and they want to be able to do everything that they can to support them and give them a step up at the beginning of their life. Now, what are some of the opportunities, Al, that you've seen that are really good for income strategies in retirement? So let's just say somebody has X amount of dollars. It doesn't matter how much they have.
Right.
Let's just say they have something saved up and set aside for retirement. What can they do to build an income strategy but not risk the whole thing?
Yeah. In fact, Josh, I think what's more important, it's more important to learn how to generate income off of what you have than it is the size of what you have.
There you go.
So you can have a small amount of money in retirement. Maybe you didn't put away as much as you wanted to.
So in other words, it's not what you have; it's what you do with it.
It's what you do with it, exactly. So when is the best time to learn how to do that? It's right now. While you're still working, want to generate additional income, you can use those same income strategies when you go into retirement. Some people will rely on like dividends or bonds.
But let's be real with that. Say you get a small dividend on, say, a couple $100,000. That's just not a lot of money.
Yeah, it may be between 2% and 4%, something like that. We had a kind of an unusual situation here recently where the returns on even some of the money market funds were around 5%. Now that's changing. As their interest rates go down, that will go down. So that's going to give you a little bit of money, but probably not enough. So how do you get better returns than what you can get with the Treasury or with a dividend stock? You can use things like options. You can use the futures market, the foreign exchange market. Those are things you want to try to learn as soon as possible so you can use them when you go into retirement. The last thing you want to do is have that conversation with your spouse where you sit down and say, all right, we need to make a list of all the things we're going to cut out of our life now that we're retired. In fact, I remember my dad. My dad was an executive with an insurance company. When he retired, I remember him saying to me, "Well, I'm going to have to cut back on things now because I'm on a
fixed income,
because he had a pension then." And that's the last thing you want to do. When you go into retirement, those are the years. And by the way, you've got a lot more years now in retirement than people used to have, 20, 30, 40 years ago. So maybe you've got another 20 or 30 years to and hopefully enjoy your life. And let's be honest, that enjoyment, a lot of that enjoyment is going to come from money. It costs money to do things. There's nothing wrong with having the ability to generate more money. Even if you use it for put it into something as a legacy, as you mentioned, or maybe you have a charitable organization you want to participate in. But the way to generate income is in retirement is basically the same as you're going to generate income while you're still working.
So what are some of the assets they can use? Let's just talk about options on
Sure.
their retirement accounts, because say someone has X amount of dollars, doesn't matter,
Right.
and they don't want to use the whole thing. Would you utilize options to have an income strategy during retirement?
Well, the options market's a great market. It's one of the best markets, I believe, for getting oversized returns and protection if it's used properly. And most people, when we even mention the word options, you can see people kind of tense up.
They just don't know what it is.
They don't know what it is,
I
or
did the
they
same
have
thing
tried to use it and they have lost because they don't know how to use it.
I did the same thing when people talked about guitars. Well, I don't know how to play guitar.
Yep.
Then I got lessons.
Yep.
Totally different story now.
Yep.
Now I don't tense up.
No, so I'm glad to see that you don't tense up. But you have to learn how to use whatever the asset is. It doesn't make any difference. You have to understand what the characteristics are. You have to understand how to use it properly. A lot of people will go on YouTube, for example, and they'll get some knowledge about something, and then they try to use it, and it doesn't work because they don't have the skills to know how to use that knowledge.
So in an options market, how do you use small amounts of money?
Yeah, let's say that you want to participate in the movement of a company like Apple. Yeah, if you want to buy 100 shares of Apple, that's going to cost you about $22,000. That's a big chunk of money to have in one position. If you want to still benefit from the movement of that 100 shares, you could do it for potentially as little as $400 or $500. Depending on the option that you're using, it is going to be a fraction of what it would cost to actually own the stock yourself. Then you have the opportunity to buy it if you want to at probably a discounted price. You can use options to protect a position. If you own stock, a lot of people, when they retire, they have stock, probably some stock positions, and they are concerned. I talked to a guy yesterday who had some really nice positions in Apple, Amazon, Google, NVIDIA, but he's scared to death that he's going to lose it. So he said, what do I do with this? Well, you can use options as protection. So if those stocks go down in value, an option position, which is similar to an insurance policy, will go up in value to offset that downward movement in those stocks. Then you still own the stock. When it comes back, if it's a decent company like the ones I just mentioned, they'll go through their gyrations, but they're probably always going to do well. So you have the opportunity to protect any downward movement, still own the stock, and then participate as it goes back up again.
Here's an example. Like I think it was Wednesday, Target had earnings. And I don't know if you know what happened to Target
I do,
after earnings.
Terrible earnings.
They went from $156 a share down at least to $120. Down to over 20% they dropped just because of earnings. Now, there's things you can do to protect that from happening. I mean, that's a huge drop. Matter of fact, I don't know if you remember, but back in about a year ago, we were talking about an opportunity with Target as a buyer at that really at about 110. And it went up to actually 180. Now it's back down to 120.
Yep.
So there's ways to protect those positions, but we actually talked about options opportunities at that time.
Sure.
Now, that's the great thing about that is because Target's at $110 per share, some people don't have enough money to buy several shares of that or many, many shares of that.
Right.
By using the option, you can do much smaller increments of capital that you're tying up of yours, and your rate of return is actually going to be much higher. And we have investing classes strictly on how to have income strategies during retirement, the concepts that you can use there to protect those portfolios, but also strategies that you can use with those retirement accounts to hopefully not just have to draw that down during retirement. So we want to introduce you to these strategies simply by coming to one of these investing classes, by texting the word investing to the number 210-210. If you're driving, you might want to pull over. Text the word investing to the number 210-210 for strategies on income during retirement, or go to tradingacademy.com. These shows go by way too fast.
Right.
We legit could do this for several hours per day, but we only got an hour with our listeners here today. Let's hear today's OTA tip of the week.
Well, for a lot of people, their thinking is that where they are is where they're meant to be. That's their destiny. And then they never venture beyond those thoughts. So what's the only difference between those that live ordinary lives and those that rise above their circumstances and create something far more rewarding for themselves? Well, it's not because of superior talents or wisdom. It's because they've discovered that they alone are responsible for giving their life satisfaction, and they take action. Successful people don't let what's happened in the past hold them back. You're not going to wake up one day and your life suddenly is going to be exactly how you imagined it would be. But you can wake up one day and decide to make it that way. You have the choice.
I like that. Choice is that key word. Invest differently, smarter, skillfully. As always, text the word investing to the number 210-210 for 2 seats. Same time, same place next week. Until then, retire young.